And just your view very quickly on the resilience, I keep hearing it, the resilience of the bull market despite the drama elsewhere. What do the technicals tell you about that?
Well, it's pretty remarkable. We had the biggest one-day loss last Wednesday since, I believe, September. And despite the fact that it was just one day, we saw some short-term measures that were as extreme as we've seen in the last couple of years. And by this, I'm talking about something like the short-term volatility index. It was up 125% on Wednesday, biggest one-day move ever. That ratio relative to the VIX spiked to a level that has coincided with market lows in the last couple of years. So as hard as it is for people to believe that one day is all we get, that's the market that we're in right now. So our bias is still to the upside. We still have about 60% of Russell 3000 stocks above their 200-day moving average. If that were to weaken materially below 60%, that would be a bit of a concern for the medium-term trend. But for right now, it's still above that threshold.
Yeah, and we can see that right there. So you're looking at the 200-day moving average. So the breadth is still continuing, which is why you're more constructive. How does that compare then to the rest of the world, for example? How is the all-world indices, say the FTSE Vanguard, wind up playing out versus the U.S.?
Yeah, so it's interesting. If you go back to the election, there was a quick spike in most global markets, including the U.S. But really, since December, the rest of the world has massively outperformed the U.S. And our call coming into the year is that we've had 7 years of underperformance for U.S. And that spread was likely to converge. Again, you have to remember, a lot of global markets have gone nowhere for 7 years. So if you look at Asia and Europe and Latin America, they've done nothing. So I think they're just getting going, especially relative to the U.S., and we think that's a trend that continues.